Welcome back, everybody. This is Fausto from Cyber Traders, and we got one of my favorite guests is back here again, AJ Brown, and he's not the wide receiver you might think of. He is the trader himself. But AJ, it's good to see you. How's it going, man? It's been a while. How's your
Oh,
summer going, man?
man, it is so good. I'm kind of stoked about this current earnings season.
Oh
So
yeah.
I'm going to be talking a little bit about that because that's not usually what I talk about, but I'm excited about it this time.
What are you so excited about? I mean, it's summertime. Is it because of the tariffs? I mean, what is it? I mean, what's
I,
so?
the tariffs. Don't even get me started on the tariffs. That's a whole other topic. No, I'm for some reason we're doing our calendar spreads, and I don't
Oh, are
know.
you?
And we're playing around with some new technology that we've got, and it's helping us screen out some candidates for calendar spreads. And these
Okay.
calendar spreads have been really profiting for us this earnings season. So, that's what I'm into right now. Besides my premium selling, premium selling is my bread and butter. But when it comes to earnings season, I'm having a ball this summer.
Well, it is. A lot of people don't realize it, but like you have that opportunity to do that every quarter. It's only 4 times a year you can do it. And how long does earnings season last? What was that? 2, 3 weeks?
2 or 3 weeks.
Yeah.
Um, but I look for those patterns, Fausto. I look for those patterns. That's why I like premium selling so much because you can't go wrong with time passing by. So when I'm talking about premium selling, it's that theta decay, letting that front month option decay away with time. Whether you're doing a diagonal spread or even doing covered calls, covered puts, that's so reliable of a pattern.
Yeah.
But in earnings season, the pattern I look for is the volatility rush and crush. So leading into earnings, the thing that you can count on, the thing that I can count on is that people get a little bit antsy, especially the long-term investors. And so they start buying those options as insurance just in case earnings sends their position one way or the
Backwards.
other. Right.
Right.
And so that causes that option price to go up. Well, what do you do when prices are high? You start selling. So you figure out a way to sell. That's what the calendar's all about, right? You buy the back month, which is more of a stable price, and then you go ahead and sell that front month, which has already been brought up by those people who want to just hedge for a day or two. And then the next day, you go ahead and liquidate that position. And the by the time the morning opens, people are done with their risk and they go ahead and take the option price off. The option price plummets, and you can go ahead and sell your calendar spread for a little bit of a profit. So I look for those that's what I can count on. I never try to count on how investors are going to take the earnings announcement.
Uh-huh.
I never try to guess whether it's going to go up or down because I'm always wrong. And, and so I play this other more reliable pattern, which is there's fear going into it, and then there's confidence or relaxation going out of it. And that's what I love about the options, right? Is that you can trade those weird patterns.
Yeah, we get a lot of people talk about options, that come on the show, and just there's so many different crazy styles of trading an
So many,
option, just
so
so many of
many.
them. And I always tell everybody that the best way to trade an option is just do it with a small lot, buy one contract and just see how it goes. And
Risk
don't depend on
management
making
is
money. Just depend
everything.
on getting the data and see what happened and
That's
analyzing it. It's the only way to do it.
absolutely right.
Like honestly, some people talking about when you talk about calendar spread. Some people, what the hell does that mean? You know what I mean? Like I don't even know what calendar. What is a Greek? I mean, what is a cover call? I mean, there's so many of them, but
There's so
that's
many
that's it.
strategies.
So anyway, but it looks like we're almost at the end tail of earnings.
Yeah,
Isn't
we
it
got
pretty much
about
over?
maybe a week or two left.
Any
I'm
any big
watching
ones?
Visa right now. Visa is reporting at the end of today, so I've got to. So one thing that's cool about these earnings trades, and I'm sorry I'm harping on this, but this is what's on my mind right now, is that you do the trade the day before and then you do it after, and you can even automate with some of these like trading platforms like Trade Thirsty or not Trade Thirsty, Tasty Trade, or the Thinkorswim, or uh, Trade Station, all these ones that have some automation in them, so you can get some of that hands-off type trading, because you're just looking for some straightforward signals. But what I like is you put the trade on the day before, you take the trade off the next day or the day after, and so you don't get labeled a pattern day trader, which a lot of us, cheap options traders, we don't want to be having to live up to that standard of being a pattern day trader.
Well, you hear they're getting rid of it.
What?
They get rid of it. Get rid of the patent day trader rule. It's big news came out I think a week ago. The SEC is going to review it. Personally, to me, it's discriminating against day traders. I
It
mean, like
absolutely always has.
but it all started back in the internet bubble that happened back in 2000, and it put a lot of brokerage firms out of business.
Yeah.
It kind of brought up a whole life of new people with prop trading. I think they're all out of business now. Prop trading is going to be out of business because of it. But what they're going to do is they're going to review it in the fall. So it's probably going to be around September, October. And then I think in November, it's going to be gone entirely. I know I had Tom Sosnoff on from Tasty Trade. And and he said he's been really pushing hard for it because it's causing a lot of problems. Listen, they got rid of the short rule. They got rid of the T+3 rule. So, now everything clears in a day. You have to wait for your money to clear.
Yeah.
And then now they're going to bring it down to they got to bring the $25,000 day trade rule down to 2,000. So it's going to really help out a lot of people now because it really is screwing up a lot. It's screwing you up. I mean, really, I don't even know what the necessary for that. Yeah, me too. I'm really, and you're talking about your style. I'm going to have to kind of teach everyone a little bit different because now we're going to get some people that now could afford to trade stocks.
That's right.
And then it's going to lead into, into your options and everything else. Because I think what happened here, AJ, I guess they realized when they did pass that law, that's how Forex took off. Everybody's like, okay, I'll just trade Forex or I'll trade futures. And it's kind of made things worse. You know what I mean?
Yeah, because yes, I'm with you.
Yeah. So that's pretty good. Now, regarding about now with the earnings announcements over, when you trade and you get into your options trade, whatever, is there a specific, stocks that you're looking for, like volatility or brand? I mean, everything's at earnings. I mean, they all have to report. You know what I mean? Like, what attracts you to one versus the other? How do you strategize? Because the listeners don't know that. They're like, how did you pick that one and not that one? Because we always find out we're always in the wrong one.
Yeah. So I'm always searching for boring stocks. I'm looking for stocks.
Why boring?
Why boring? Because I don't want them to move. See, this is what's so beautiful about the option strategies is that you can profit on movements up, down, sideways, but you can also profit on things like time passing by and fear versus confidence, right? So for my strategies, right, I actually don't want them to be the most I want when I think about the investor that invests in the stocks that I want to trade options on, I'm thinking about the guy or the gal who's like putting money in there and holding it and like not maybe collecting a dividend off of it, but they don't want to be, they don't want the volatility. I'm thinking about, somebody who's putting their retirement money into the stock. So I'm staying away from those, 7 or 10 or whatever they call those, the FANG stocks, I'm staying away from those ones that are getting news headlines. Yeah, no, I traded some earnings. I'll show you some results. I'm trading some earnings on things like Bank of America, right? Citigroup, Coca-Cola, right? These stocks that they do well as a company. They are always doing positive earnings. They're not one of these tech companies that goes, quarter after quarter without showing a profit. And they might hand out a little dividend to their investors. They're just so boring. They just do their thing every day. And, even during earnings, they don't seem to pop very high or low after earnings. People are like, yeah, that's what we expected. And that's what I like, because even though that's the actual reality is that, yeah, that's what we expected. People ahead of time do go ahead and buy their options just in case, pushing that options price up. And I can use one of my strategies to take advantage of that high price of options the day before that then drops when they don't need it. People are using the options like insurance. And so on the day that they're buying the insurance, I'm the insurance salesman. And then on the day that they, don't need the insurance anymore, I'm the buyer. I buy it back cheap. So I'm just buying, selling high and then buying back low. It's
So,
almost like
so
shorting it.
so are you selling more the option more than buying it?
Well, so that's what the beauty of the calendar spread is, right? So the calendar spread, you buy an option that's really stable in price. So it's farther out in time, it's very stable in price. It's not going to change much. And then that allows you, right? That gives you the covering. That allows you the ability to sell a more volatile option up front. So you buy this stable option that's not going to change in price, and then you sell this expensive option up front, and then the next day when it drops in price, you buy it back, and you're making the difference, right?
Well, you're gonna have to show us that because the next
I
few
will.
moments, definitely gonna go to the system. I want to see how you doing that and whatever.
Absolutely.
But since I had you last, just could you tell me a little bit about something? I was looking you up before, and I remember. Listen, I know you. How many years I known you for now? It's got to be what, 20 years, probably.
I
I don't
was going
even
to
know.
say 20.
At least 20 years, right? You often refer to people as as the most world's disciplined trader.
Yeah.
What exactly does that mean? What does that style mean?
What So I call myself an end of day trader, right? Because I've always, even in our school, right? And we've got two legs of our school. My school's name was Trading Trainer. We founded it in 2003. It's been around since hammer was a hatchet. We've got a for-profit school that you can go online, look at tradingtrainer.com. But we also have always run this non-for-profit, right? And we partner with the CBOE in Chicago, and we get some kids off the south side of Chicago, and we bring them in and we teach them the same stuff. But I've always dug on that. And the scoop is I want to be able to let these kids, or my clients, I want them to be able to have like a fun lifestyle, right?
uh,
Because that's really what I do. I started off working at HP doing this stuff. I've always been kind of a techie dude, and so I had to figure out how to do it and still hold a day job. And then around 2005, I was able to, fire myself from that day job and live off of my investments and things like that. But I still am very disciplined, because then, I wanted to go off and become like a scuba instructor. So, you can't be in the ocean and trading at the same time. So I've always figured out, and so that why they give me that moniker about discipline. I actually think they call me that because this is my peers. They call me that because they think I'm a lazy trader. I like to think of myself as an efficient trader, because I'll try in the evenings. And now I've got a toddler, even though I'm 52 years old, I've got a toddler running around. And
you're
so I like to spend,
52.
yeah,
Wow, I'm
look at the gray.
53.
Look at the
Yeah.
gray.
Well, you could see, but this is what you get lived. So you're almost
Well,
there.
my wife has the hairdresser put shoe polish in my hair.
Yeah, I just put
So
some gel here in mine.
that
See,
that's
that
it.
little spot right. But
But I like to spend all my time with little Josephina over here. So the scoop is after she goes to bed, I want to have my process. I focus on managing a portfolio of options trades rather than looking at each individual trade. So I like to be able to do everything in the evening after she's gone to bed, and then set up my automatic trading bots for the next day. And I just come back and see how the trading bots did in the evening. So whether you call that disciplined or efficient or lazy, that's me, right?
well, I think that's everyone's biggest issue. Like today, I was doing a trade, one of my advanced in one of my classes, and we had a stock. I was teaching something called a Fausto flag. It's more like a bear flag, and people don't understand exactly like how consolidation actually happens. So when you see that triangle, they don't realize that the buyers and sellers are competing with each other. And like you just said, like one of the hardest things people don't like to do, AJ, is they just don't like to take a loss, And it's like,
No,
and sometimes it's like they hope that's going to come back and they don't. Like when I teach my students, I tell you, I don't teach you how to make money. I teach you how to stop losing it. That's really where it comes down to. Don't worry about making money. That takes care
no,
of themselves, like you said. It's the losers you got to worry about.
you
And if you're
do.
breaking those Fausto flags and whatever, you know what I mean? Like we just saw a stock take a hit. We took a loss. It was like 15 cents. If he didn't get out of it, it would have been $1 loss. In
That's right.
1,000 shares, there's $100 loss versus $1,000 loss. It's like, sometimes you have to admit it. And like you said, that's what I love about being very, very disciplined. And I think everyone just has to understand that just comes with experience.
And you gotta, like you just said, right? You don't focus on what the potential gains are. You focus on what the potential losses can be, and you manage that. You do your portfolio sizing, you do your position sizing. You set up yourself for the worst case scenario, and then you have a trade plan that you follow. And the only thing that can happen is it could be better, right? And
Uh-huh.
so that's how you play the whole game. That's the name of the game, is risk
Now,
management.
now, AJ, when you trade, and there's another thing people always have concern about. Are you in multiple trades, or do you try to be focused just on like one trade or just a few of them? Because
Multiple. So I,
yeah.
I
But
like to
where's the
manage.
cap? I mean, where's it like? I mean, when's enough that you can't go over? Like I had one student says, "Oh, I'm in 52 trades." I'm like, 52
No,
trades? I can't.
no, I can't wrap my head around that.
Uh,
That would be a full-time job, which would be defeating the whole purpose of being an investor in my mind. So I got rid of my job in 2005 because I didn't want to work that much. I didn't want to
right.
wrap my head around 52 trades. No, my portfolio right now, I have two portfolios. I have a portfolio that's kind of a paper trading portfolio where I test out my positions ahead of time so
Okay,
I could
that's
see.
interesting.
Yeah, because mine are for my premium selling trades, my bread and butter. These things last 8-10 months, and it's the same ticker symbols that rotate around. I've been trading some of the same tickers for the last 25 years.
Yeah.
So the scoop is if I'm going to include one of these tickers in my future trades, I'm going to run it through its paces in a real time. I call it forward testing, but it's nothing more than paper trading in real time account, and see that it floats to the top, that it can meet the criteria of all these other ones that are in my portfolio. But it only takes, anywhere between 7 and 15 positions to max out my portfolio. And my portfolio is a 7-8 figure now portfolio, but I'm only in 10, 12 positions, and that maxes it out. I've got no cash left. And that's where I want to be. I want my whole portfolio working for me. I don't want some of it in cash, because if it's in cash, it's not doing anything.
Cashing can't do anything.
No.
A lot of people too here also, AJ, they get into, like I always try to tell everyone, don't count my money. I won't count your money, because everyone's different. You don't want to discourage people, bragging, how big your account or whatever.
No.
And there are people that blow up their accounts. I mean, you understand that trading is a very big failure rate. And that's why we love teaching, because it's bad for the business. It's bad for the industry. It doesn't look good. You want everyone to survive. You don't want anyone to be. We want everyone to be rich, but you just want people to live. You know what I mean?
Yeah.
Um,
You want them
maybe you can
to be
explain.
able to fire their boss.
Yeah, exactly. Be your own boss.
Yeah.
So tell me a little bit about some of your dark ages, the days that you ever had, because people don't understand that you're gonna listen. You're gonna fail in trading before you can succeed. And how do you succeed? So could you tell me just a quick little history before we go into your style, really quick? Somebody that listen, you're a human being. You made mistakes. You had one. Tell us a little bit of what happened to you at that time and how did you get out of it? Because people have to understand here that I'm always preaching about that, because some people are done after 3 months. They try, it didn't work out, they're out of the business.
Well,
So,
first, for me, it comes down to planning the trade in advance, right? And, and when I plan the trade, I'm looking at, if everything went wrong, what's my max loss, right? In
mhm,
other words, what percentage of the trade am I going to lose? Say, for instance, I'm going to lose 25% of the trade. And say for then, I want to limit that loss of my portfolio, because I never want to, 25% of my portfolio. So I'm not going to put all my eggs in that one basket. And that's one of the bad things with options, is options are so inexpensive. People get their mind around the gains and forget that in an option trade, you could lose it all like this, right?
right.
And so, the first thing is figuring out what could go wrong, everything that could go wrong, and calculate it. What would be that loss? And then, for instance, if it is 25% of your trade, and you want to limit that to, say, I don't know, 5% of your portfolio. The max you'd lose with one trade is 5%. Well, then you do the math and you realize, well, if I only want to put about, 1/5 of my portfolio into this trade, because if I lose on this trade 25%, my overall portfolio, in other words, there's a little bit of diversification there. You don't
Mhm.
want any one trade to hit your portfolio. In fact, most of my folks are going for 2%. They want to be able, in other words, you want to be able to do 50 effed up trades in a row before you wipe yourself out. The last thing you want to do is have somebody come up to you and be like, hey, man, I did your strategy on month one. I made like double-digit returns. Month two, I was doing so well. But then on month 10, I got cocky and I did the same trade. And now not only did I lose all my gains from the first 9 months, but then I also lost half my portfolio. That means they didn't plan for the worst case scenario and size
Yeah.
their position
Or you get
correctly. So
cocky.
yeah, and I've been there, right?
Yeah.
One of my biggest loser of the trades was like I lost close to $100,000, right? And I didn't, I wanted to go under the covers and just, and I didn't want to talk to anybody, but I was part of a trading group. And I really think that's important. You got to be around other folks that speak your language, that have been, through it. And, you meet with your trading group and they're like, yeah, okay, what are you going to do tomorrow? Right.
Yeah. Yeah.
But you don't want to have those kind of losses. But when you do, you want to have, I find that having somebody who's, been through it, who's kind of ahead of the game, who's kind of, you're following, you want to have somebody like that. But then you also want to have peers in a trading group. It never, I've never found somebody, even the most successful traders, they bounce ideas off of each other and they help themselves out. I've never seen a lone ranger actually be successful in the long term. So group,
I'm glad you brought that
mentor.
up. I'm glad you brought that up, AJ, because there's a lot of students that we train too. Like we run our trading room. We got hundreds, if not thousands of traders in our room. And same thing, like, I've learned so much from my students too. They see something that I didn't see. They say, hey, Fausto, check this out. Look at this stock. I'm like, in the industry, like there's software that I even know I wouldn't even give it time of day. And someone told me, says, no, this is your style. It worked out great. So you're right. And I think a lot of people understand that a lot of people cannot be trading on your own. And you got to find somebody you adapt to, a team that you could adapt to. It's your style and so on. But
That you
getting
can
back to the
learn
losers,
from.
yeah, you got to learn from them. I learn every day from my students too. I
Well,
mean, that's
and it's funny you say that, because here's a little secret. I'm not going to speak for you, Fausto, but one of the benefits of me running my school for the last 22 years is that I train these folks in, the style of the options trading I like to do, and then exactly what you said. They point things out to me that I miss, and I can
right.
go ahead. It's almost like I've got my own analysts that are, in my group, and they're like pointing out things that I missed that I can go trade. So it's only benefited me as a teacher to have these students, because it's just fantastic. So I don't know if you found the same thing, but man, my students are so on the ball that they're pointing out trades to me. Sorry, my headphone totally got caught on my chair. They're pointing out trades to me that I miss. So I love having just a big
Yeah,
group of traders in the same
me
field.
too. I had some great traders. They point something out to me. Even like, they introduced me to all of these high dividend paying
Yep.
stocks and I didn't
Yep.
know about, like,
Yep.
all these Y stocks, CONYs and the TSLYs, all that. It worked out great and stuff like that. But listen, regarding my losers too, listen, I took big hits too. I mean, I just recently, I tell everyone, I mean, with the whole Liberation Day,
Mm.
who didn't get crushed on that? I mean, like, and it just, I didn't think it was going to go down that low,
Mm.
but then it got to a point that I slingshot right back up,
Yep. That was the
and I
good
was able to
news.
buy things cheap. I mean, listen, Tesla was at 500, dropped down to 250. You had NVIDIA go from 140 down to 88. You know
Yep.
what I mean? Like, people got destroyed. I mean, like, I didn't think it was going to go down low. And last time I saw that was COVID. You know what I mean? But
Yep.
there was an opportunity out there that most people quit and went out of business. But people like us say, listen, I've been there, I've done it. I'm not going to quit. It's like, whatever. it happened when it came back, and I made all that money back. I lost
Plus
and
some.
and some then too.
Yeah.
And the only way you know that is by surroundings. As long as you love your job, that's what's key. But so I just let everybody know we all lose. You just gotta know how to survive,
It's true.
But show me your style really quick
Yep.
because I want to see exactly what you're doing, and I
Yep.
think the traders here want to see it too also.
All
So
right.
you can share your screen.
Yep. I think my screen's up, and let me go ahead.
Is it this one?
That's
There
it.
you go.
That's me. That's me. Here, let me pull up a chalkboard really quick because I'm just gonna kind of explain what I was saying a little bit earlier, but I'm gonna do it with some pictures. Now I'm gonna show you some of my trades, and let's see here. If I press this button, yes. All right. So I think you're seeing a nice white screen here. Here's the scoop. I'm gonna put this here. So when we're doing a calendar spread, what that means, calendar spread is another name for a horizontal spread. What it means is you got these options, right? Options have a ticker symbol. Let's just take like Coca-Cola. They've got an expiration date. So, we've got some out in, say, October. I think it's the 17th of October. It's always the third Friday. And then we've got a strike price. This is where the option's going to be either exercised or not, right? So let's just say I'm just going to pick a number out of my rear end here, 45, and then it's whether it's a call or a put. And so the scoop is with a calendar spread, you do two of these at the same time. You buy one and you sell one. And you can do this with your broker. You just say, I'm going to do a calendar spread. And the only thing that's different is the expiration date. So maybe we're talking about the 18th of August, even though I think it's the 15th of August. Same strike price, same option type. So what does that do for us? Well, okay, this option that's far out in time, and I'm thinking 3, 4, 5 months out in time, that option is a pretty stable price. So you buy that option and it's this certain price. I'm just kind of representing it here, right? And then the next thing you do is you sell this option that's going to expire in the next 3 to 5 weeks. And there's weekly options. I usually gravitate towards the monthly options because they have more liquidity, and I'm usually dealing with bigger, trade sizes. So I want the liquidity. But like I said, what happens is all the traders that are waiting for the earnings, they get fidgety. And what they do is they wind up buying that option that's going to expire in the next 3 to 5 weeks. They buy it as insurance against investors sending the price wild, right? That's what, that's typically why options were even created in the first place in the 70s and 80s, was to hedge against risk. So I go ahead and I sell that front month. Now, again, this trade is all done at once. It's called a calendar spread. And so what you wind up paying for is just the difference, right? By doing these trades at exactly the same time, you buy that stable one, you sell that high priced one, and you just pay this difference, right? Now, earnings comes, right? So you time this. If it's after market close, you would do it the day of earnings, and then earnings would happen after market close. If you're doing it, before market open, you would do it the day before earnings would happen, right? And then when you come back the next morning, you'll find that the stable option has hardly changed price at all. But that front month option, the one that everybody used for insurance, goes down in price very quickly as people are like, I don't need the insurance anymore. Let me get my money back. And so what happens to your calendar spread is now it's worth this. And this is called profiting on the volatility crush, the next day volatility crush. I know it sounds like a lot of craziness. And I've been doing these trades, Fausto, these earnings trades for years. But the key is you really don't want the underlying symbol to move that much. So you go back and you look at the last 4 to 8 earnings seasons, and you try to find a symbol that traditionally doesn't move very much when earnings are released. So that's why I was talking to you about the boring stocks, because that's the thing that can kind of hurt this trade, is if the underlying symbol moves too much in one direction or the other. So this is not a straddle strangle. We're not trying to get a play where we're guessing what direction. Instead, we want a symbol that traditionally doesn't move. And then the other thing I do is I like to look at the latest news headlines, like for the last 6 weeks, and I read them, in chronological order, just the headlines, and I try to see if there's any sort of bias that I need to have, or if there's any sort of warning that, hey, this earnings season might be a little different. This company's, having some issues, and if that pops up, I either won't trade it, or you could do one of these earnings trades and you could pick the strike prices if you have a bias. Like, for instance, if you think the price is going to go up a little bit, you'll pick the strike prices a little higher than where you're trading on the day before, right? And so let me take my chalkboard off here, because that's exactly what we're doing. And then I'm going to ask for it. I'm going to tell you guys exactly what I'm thinking in advance. I've got some technology feeds. We've been, getting market data. I've got all the options data for the last 5 years stored on a huge Amazon Web Services database. And we've been using this for some of our premium selling throughout the years and all of that good stuff. But we're coming up with a screener to do the work that I've been doing manually in mass, to help some folks do it faster. And I'll tell you how that screener works, and I'll tell you exactly, how you could get on that beta testing program if you want to help me test some of these trades. And even if you do it in your paper trading or your forward testing log, I'd love the feedback. I'm going to give you the tool for free. So let me just show you some of these. I did Citibank. This is one that our new tool, I'm dealing with the rough part of the new tool. We haven't gone to beta yet, but it found me Citigroup this time. So here's on July 14th. So let me pull up I got my Thinkorswim running here. Let me bring you over. I'm watching Visa. As I told you, we're going to be placing a trade today because Visa is reporting after market hours. And then tomorrow we'll look to get rid of the trade. Visa is one of those ones that hardly moves after their earnings unless something's on the radar. But
AJ,
take a look.
AJ, makes a
Yeah.
dumb question. Okay.
Yeah.
If it doesn't move,
Yeah.
how do you make money then? I mean, I thought you need volatility to make money. I mean, like, is the
Imply.
spread?
Oh, that's such a good question. Go ahead.
No, because everyone's probably asking the same question. I mean, like when we look, like when I trade, we're looking at a top 20. We need volatility. That's how it moves. But like if there's no movement, is there buyers and sellers out there to make on that spread?
Here's the scoop. So you're talking about volatility, like true range, average true range, the
Yeah.
actual movement. So with options traders, we've got this other thing called implied volatility, right? And the
Okay.
only way you can get the implied volatility number is, number one, if the stock is optionable, meaning there's options on it, and you reverse engineer the options pricing formula and factor out what the underlying symbol is doing, factor out the expiration date, and what you get is the raw buying and selling pressure on that option. So basically, implied volatility is how much insurance are these people buying for an expected move. So implied volatility is like looking through the windshield at what might be ahead of us, whereas the historical volatility, the true range, the actual movement of the price, is kind of like looking through the rear window at where you've been, right? And so option traders are always comparing curves of implied volatility versus actual historical volatility. And it's often off big time. Like, it's when I say implied volatility, it's like the fear that never happens. It's kind of this human nature thing where, folks will buy insurance because they're afraid of what might happen,
What happened? That's what
and
it's
it
for.
might never happen. But
Right.
when they buy that insurance, they drive the price of the options up. And so we can actually take advantage of that volatility rush. That's them buying the options. It's not changing the price of the stock, right? It's just that they're buying these options. And so the implied volatility is up. They're preparing for the worst by
Okay.
buying these options and driving that price up. And then the next day, when nothing happens, it's a nothing burger, right? They're like, oh, I don't need this insurance anymore. I'm going to start selling it back. And as they sell it back, it's the supply and demand. All that selling drops the price back down, and now it's a volatility crush,
So,
right?
so does it expire worthless, and then you make the money off that? Is that how it works?
I'm actually just selling the options at whatever price they are. I'm not even going to expiration.
Okay.
There's another buyer out there who's like, oh, good. He's selling that insurance. I might need it later. I'll go ahead and pay this low price for it, right? So
Uh-huh.
I just make sure I'm on the right side of the equation. So, for instance, when people are driving that price up, I'm like that Trading Places movie with Dan Aykroyd and Eddie Murphy. If some of your folks are as old as I am, they
Ah,
knew when they knew when the demand was there and they started selling. So I'm selling the insurance to these people who want to pay top dollar. And then when they're, done with the insurance and they're selling it back and they want to sell it back and the price drops, I'm ready to buy it back.
buy it
It's
back.
kind of like I'm basically shorting that option. I short it, I sell it when it's really high in price, and then I buy it back when it's really low in price.
Well, and by the way, if everybody, we're going to share that link for you because everybody, I guess, wants to see when you're going to be coming up with that. Want to see
Yeah.
that strategy, want to sample it. So
Let me show you some of the returns really quick. Check out this Citigroup trade. We did it on July 14th. 3:18 in the afternoon, right before the market closed during professional hour, and then the next morning at 10:53, just shortly after amateur hour, we were just waiting. What we like to do is we like to wait for the strike price and the actual stock price to be. That's like our ideal selling point. We walked away with 33.2% on Citibank. The next day I did Bank of America. Again, this is one that was found out 15.7% return on that one trade. And then Coca-Cola last week gave me 22.2%. Again, I do the trade and I'm showing the two different legs here. And you can kind of see that, the back month doesn't change in price so much. The front month does. And so that's how we go ahead and wind up making these into money
Wow,
makers.
wow. Well, really looking forward.
And so the scoop is we've got all this options data that we were using for a different purpose, right? If I bring over my web portal, free access to the web portal. In fact, the options lookup tool that I'm talking about, where you can play around with different options, you can get that with your free access to the web portal. We had all this options data for a whole different purpose, looking at premium selling stuff. And I started to say to my guys, my tech guys, I'm like, could we solve for the historical volatility, right? You can see we've got a new, it says non-applicable here, but in the versions that we're testing behind the scenes, can we solve for the historical volatility and the implied volatility difference and make a screener? And they're like, we could do whatever we want to do. You just have to tell us what to do. So they started to do that screener stuff. And then don't get me started on AI, but the AI part came in, and what I find that AI does for me best, and it's not very much, but what it does do for me best is it takes like news articles and it condenses them down into bullet points so I can take in and not have to read all the fluff. And so what I've actually asked, the AI to do is, hey, go through the last 6 weeks of news headlines for a particular stock. And we've got our news feed part of Trading Trainer as well. Go through those headlines and help me determine if, this one that I found with my screener is, number one, dangerous because there's been some sort of like tumultuousness for this company that otherwise it would be a great trade, but this quarter, maybe I don't want to be in it. And number two, if maybe there's a little bit of a bias where I could pick my strike prices up or down and make that little extra return like I did on Coca-Cola. So I've been kind of cultivating this tool. I don't know if it's going to be 6 weeks or 12 weeks, but we're going to release a beta version, Fausto. And can I tell people how to get on my beta list if they want to test
Yeah,
this
we have
tool?
the link right here. Is this the link that you're talking about for everybody to register for it right there?
Yeah, the quick links page. So if you go to
Yeah.
my quick links page, there's two things you got to do. Number one, sign up for the free indicator suite. And if you want to get the free indicators, you can. But what that does is it gives you access to my portal. And that's how I'll deliver the beta tool to you when it's ready. Right. So, number one, do this one right here. Sign up for this free indicator suite. So, click on that button and then just go through and get in my web portal so I can give you the beta test when it's ready. And then the other thing is if you don't mind, subscribe to the YouTube channel, because that's when I'm going to announce that the beta tool is ready. I'll put it out on a YouTube video. So if you're subscribed to the YouTube channel and you already have access to the free indicator suite, you'll be able to then get the free beta test of this new screener and do some earnings trades with me. They're really, really easy and fun.
Yeah, I mean, listen, everybody should subscribe to everybody. I mean, listen, not everyone's a big fan of social media. Certain ones, I know everyone's a fan of YouTube more than anything. But
Yeah.
I mean, listen, I was just posting videos just yesterday, just on how to follow how to use level 4 and stuff like that. But definitely go out there and get on the followers. I mean, you can't follow everybody. You know what I mean? It becomes annoying, but you really want to follow the people you are. And AJ, I like that. I like the way you did that, and have those links there. And we posted a link up there, everyone to see it. So just click on that link and subscribe to all those channels, whatever you're a fan of. If it's Facebook, Instagram, TikTok, but even YouTube is like the biggest one.
Yeah.
But the MK Suite's definitely awesome. I'm going to check that out myself too. Definitely have to
Yeah.
sign up for it.
Yeah. And I'll be honest, I'm not, I've got some marketing folks that get me to do stuff on these other guys here, but what I really want you guys to do is sign up to be one of my beta testers. That's going to be the most valuable. So like I said, just follow me on the YouTube, sign up for the free indicators. That way you're poised and you'll get the announcement of, when the beta is ready, and you'll know when to go look, right? So
Yeah.
I'm not asking for anything else besides, some people who will test this with me. Even in your paper trading log, I want you to see how easy this stuff, how it works, and I want you to help me iron out the bugs, right? So that's all that's my big call to action right now.
All right. Well, so everybody take him up on his offer. AJ, any last minute
Can I
recommendations
blow some
or
air
advice
up your
you want to
butt
leave
for a
everybody off with?
second? Fausto came and spoke to my folks, what, like 3 or 4 months ago?
Yeah,
And
something like that.
you follow the price pressures, right? You follow
I follow
level,
the order flow. I follow the smart money.
and you know what? My folks signed up for your stuff, and I can't. My ticket system is just full of compliments about how, if you take some options trading strategies and you follow Fausto's stuff,
Ordered.
it's like, oh, order flow. It's like easy money. So I just wanted to let you know that my folks are enjoying your stuff. Really, it's blowing up my messages.
That's great. Well, AJ, you know what? Listen, we've known each other so long, and I remember you back then, the day when you first got into it. You almost like we all learned from each other, being a student of each other. And I always tell everybody, what makes an option move is the movement of the stock. So if you want to use someone's style on the option side, if you just knew where the order flow is, then you'll know, hey, there is action going on, and that will lead you to
The
what option to jump
combo
on.
of the two
What
has
it
been
is.
like a marriage,
Right, right. That's where
a
it
good
goes.
marriage, not one of the ones that goes sour.
Yeah, not the divorce, because they're very expensive.
Uh, so I
Well,
hear.
AJ, listen, it is just absolutely fabulous to have you here as always, and look forward to having you back. And everyone, just take him up and check out and sign up to his subscriptions and his beta test and everything else. And AJ, look forward to having you back again. Listen, you enjoy your summer, and let me know when you're in town. Maybe we'll go out and get something to eat together, huh?
Hey, I might drop in on you.
All right, guys. Thanks for listening, everybody. We'll have the shorts made for this, the long videos, and then you guys can watch on our channel. And then, like I said, we'll see you back tomorrow for another episode of Cyber Traders. Thanks, everyone.